Hi there, this is Mark Sebastian, founder of OptionPit.com with the Option Pit video blog reminder. This is for educational purposes only. Anything that we say here is just for education. If you lose money, it's your fault. Consult your investment advisor for other information. And today what I want to talk about is Facebook. And what we looked at today was Facebook volatility to start. All right, they got earnings today. And what I was noticing was that really over the last year, there's only been, or the last 2 years, there's only been one other occasion where volatility got this low. All right, into earnings, and that was at the April one. And if you look at April, you'd be right here. Let's just see what the underlying did. And one will notice really not that much happened. All right, didn't make that big of a move. It went from close of 85 to about 82, so it didn't make a huge move. Now, it had some overnight range. It did. So if I pull it in tighter, let's pull it into like May to March. You can see that, it had a decent candle, but then kind of pulled back. Now, it did have some follow-through. All right. Then we pulled up the skew chart and noticed that the November skew was really bid at the straddle. The 103s, the 104s, the 102s. Really bid, but really cheap at the wings. All right. So what we decided to try and accomplish was a butterfly. And we really, this is just, I did it small just to kind of track it. The trade I kind of looked at was the straddle was about $6.50 wide, if you will. Call it $6 wide, somewhere around there. I decided to basically set up a butterfly where I sold the straddle and bought the wings. And I was able to do the 103 straddle for $4.58. So if you look right now, Facebook's up big. They haven't done their conference call yet. They're certainly looking like they've got a decent shot at being over that 107.58. But, that's assuming that, their pieces of this won't have value left. So I think with this thing set up 103, when this collapses tomorrow, assuming Facebook stays here, that I may be flattish. But if Facebook pulls back at all, which it has historically done, typically after the bell is the peak for Facebook, not kind of the lower part, not the low end of the range. So my guess is when I come in tomorrow, Facebook might be back down to 106, something along those lines. And then I think that I'll be able to cover the fly that I sold at $4.58 for probably about $4. Now, this is not a trade I normally like to do. It's very rare for me to actually play an earnings play, but there was a lot of interest and I wanted to kind of mess around with it. Another trade we looked at was some 1x3x2s that were bullish, and those are going to perform very well. Looking at kind of and that's kind of what the way Facebook has developed. It's actually underperforming its straddle. So the straddle sales kind of worked. Now, let's move on to kind of the overall market. You see big move in VIX today, even with a small move in the S&P. There's some pent-up fear. There is. And I think that's where as I look, the way things are developing, there's some fear that this thing could back off some, right? And that we could maybe test, 2060, 2070 again, and that's with kind of where volatility is right now. Big reminder, we've got our introduction to volatility and volatility trading course this Saturday from 9:30 to 1:30 Eastern Time. Go to optionpit.com/vol-primer to get signed up. You can also see my latest trading volatility and earnings free webinar I did there. So if you're interested in watching that webinar and learning about some of the things that we're going to do and looking at a picture of me, this is the place to be. OptionPit.com/volprimer. Okay, folks, I hope everybody has a great evening. And reminder, this was for educational purposes only. If you got questions, you can email me, mark@optionpit.com. You can call 888-TRADE-01. Have a good day, folks.